Good morning. You're watching The Market right here in ET Now with me, Ayesha, Faridi, Avanne, Dubash, Nikunj, Dalmia joining in the studios. And it's getting a little wobbly for the markets, at least for the last 2 days. Was no different yesterday as well when we had that fall of about almost 0.6%. Having said that, we're still clinging on to that 22,000 mark. So in that sense, there's no reason to worry, so to speak. But just talking about the global cues, this morning they're stable. The GIFT Nifty is already indicating a mildly positive start for us, and broad set of numbers coming in from Nvidia. A revenue uptick of 265%, no less. That's what they've been seeing. And clearly, it's that particular stock which has actually jumped up the movement on the Nasdaq as well. But that said, decent handover, nothing really to complain.
Nothing really to complain, but look, global markets are stable, but there is perhaps something which can you afford to ignore long. And what you cannot ignore to afford long is the jump in yield. Dollar index above 104. Crude now really way above 80, going to that uncomfortable level of 82.5, 83.5. And these are the factors which in a sense could really have an impact. I mean, crude is flat, but it is really going towards 83. So while you could say that global cues are stable, but in terms of the macro positioning, the macros is where you need to now start examining it if the macro picture in terms of risk, dollar index, if that deteriorates further. So nothing wrong right now with the global setup. Nothing encouraging about the global setup. It is status quo, but incrementally there are changes in the yield and in the dollar on the dollar index, which I think you just need to be a bit watchful of. Could this just really trigger a selling stampede, or will this just come and go? I don't know. But all I'm saying is watch the space.
Okay. Yeah, the FOMC minutes as well overnight were kind of stale. There wasn't any new info, so to speak, coming in there. Fed's Bowman saying that the time for lower rates is certainly not now. Nvidia earnings, of course, like we said, definitely sparkled, the street over there. But yeah, that's pretty much it when it comes to the global context, and a dull Wednesday for us as well on the negative side.
Absolutely. We wrapped up the day at 22,055. So we were down about 0.6%. And it was actually the broader end of the market, Ayesha, that underperformed. And it was pretty much towards the second half of the trading day that we saw that selling resume and then pick up. So the breadth of the market as well was on the downside. And it was the Nifty Bank Index actually that also put pressure. A lot of those heavyweights that came under pressure, like an SBI, as the Nifty Bank Index snapped that 6-session gaining streak. So nothing to write home about in terms of yesterday's trading day, Nikunj.
So you made 3 times new high this in a patch of 15 days. And there is just no thunder even in large cap stocks. And that's the point I'm trying to bring out, that okay, optically you're making a new high, but technically that is not translating into any kind of a grand rally, a follow-up move or anything special. Second, benchmark indices may be at an all-time high, but mid and small cap stocks are not at an all-time high. Something which is worth examining, that the tail is no longer wagging the dog. It is the large and the mega caps which in a sense are now suddenly outperforming. Let's look at the month of Feb. Very small 15-day kind of a trading window. Look at the Nifty, the Bank Nifty, and then we look at the small and the mid cap index. Now let's look at it. That's yesterday's data. Market slipped from the day's high, closed not at the day's low, recovered marginally towards the fag end. And that's the Bank Nifty for you in the month of Feb. But if you just look at Nifty and the small cap index and the mid cap index in the month of Feb, which is what it is, the Bank Nifty is flat. Courtesy a comeback in HDFC, it is flat. The mid cap index is up just 0.5%. The small cap index is down 0.5%, and the Nifty actually has given you 1.5% interest. So directionally, their underperformance in mid and small cap stocks has started. That's point number 1. Point number 2, the inertia in the market is missing. Even though optically you're making a new high, supply is coming up. So I would use the word thunder or perhaps jammed, but my view is markets are lacking a trigger. There is drop in energy levels, there is little follow-up buying. It's not the time where you want to really take a large gains. You'll have to look at perhaps very stock specific action here, which will always be there in any market, but taking a view on the market based on the current technical setup, I think the options to really make big gains, I think is not there right now.
Well, yeah, absolutely. Some consolidation also could be par for the course. Well, one news, it's the paint sector which is going to be in focus. Grasim is all set to now inaugurate its first paint plant. While this is, of course, something which is well in the price because the announcement came in much earlier. But yeah, it's finally here. Competition from the mighty big one.
Okay, there's Birla moving into the paint industry, nothing new about it.
Yeah.
But in terms of the announcement, in terms of the grandstanding, in terms of what their thoughts are, in terms of how they would really be challenging the entire current incumbents in the paint industry, a lot would be known today. The Birlas have come and they're challenging the entire dominance of Asian paints and others in the paint industry. Why is that crucial? Because for the first time you got competition coming from a large group, because JSW did move into the paint business, but their investment was that not large. We're looking at about 10,000 crore kind of an investment coming from the Birla group. So this is something which really would be the exciting watchword for the market per se. And given that, they have such a large commitment, will the entire setup of the paint industry change? From a market standpoint, could there be a price war? Could there be a P compression? Could there be, is this the geo moment for the paint industry? That we'll only get to know when the press release and when the entire, strategy forward would be announced by Mr. Birla. But from a market standpoint, look, this is exciting because paint stocks in India have been the highest wealth creators. Yeah. Asian Paints, Berger, they've been highest wealth creators. Incumbent comes in, and this incumbent is coming in with a big pocket and a strong distribution and a great brand. So obviously it will have impact on the paint industry and the pricing per se. Just think about it. Reliance came and challenged Birlas in the telecom space. Adani came and challenged Birlas in the cement space. Birlas are coming out and challenging Asian Paints in the paint space.
Okay, let's see what's in store. In fact, our correspondent Subin Chaturvedi is currently in Panipat for the inauguration of the plant. So let's take it across to him and find out what's all the buzz that he's picking up. Sumit?
So we are in the industrial town of Panipat in Haryana. It's a big day for Aditya Birla Group, its flagship company, Grasim Industry. It's going to start the much anticipated entry into paint business. Chairman Kumar Mangalam Birla will himself launch this business under Opus brand, and from Panipat, virtually, the plants will be launched in two other locations, Ludhiana in Punjab and a plant in Tamil Nadu as well. As we have already said, it's a highly anticipated entry with the company aiming to capture around, it's a industry worth 70,000 crore rupees. 10,000 crore rupees of investment have already been announced, and today the first plant will be shown to us today in some hours from now. Also, the overall entry into this segment, with this, Aditya Birla Group plans to be the number 2 profitable player in the overall segment. Talking about the whole industry, it's going to get a major boost with the growing of Indian economy, housing of all. That is one of the major focuses of the government. So it's a profitable business in which Aditya Birla Group is making an entry today. As far as the capacity is concerned, around 1,300 million liters per annum capacity will be there. So but as far as the industry is concerned, it is highly competitive market. So we are in this Panipat town of Haryana, and it's a highly anticipated entry of Aditya Birla Group into the paint, decorative paint business will be made today here in some hours from now.
It's foray into paints. We'll delve into what it means for some of the existing players as well. But Sumit, thanks very much for giving us that heads up. Let's move right on then and talk about the global setup. Incidentally, by the way, the Nikkei has surpassed the all-time high that was hit in the year 1989. So great going there. But the rest of the Asian market looking tempered. But let's find out what the commentary is on the FOMC meet outcome as well as on the road ahead for the global markets. Vinny's here with a summary of all of that. Vinny?
Good morning, and let's start with a bit of a highlight coming in from the FOMC minutes meeting minutes, and what they're highlighting is that most Federal Reserve officials have spoken about this before as well. That they're flagging of concerns of moving too quickly in terms of cutting interest rates, indicating the risk of weightage, keeping borrowing costs elevated for a longer period of time. So a bit of a concern that they have highlighted again this time on that front as well. They're saying that policymakers are remaining quite attentive in terms of the trajectory of inflation, keeping a close eye on that target that they have of the 2% mark as well. But cutting interest rates a bit too fast is not something that they want to do. Moving on, we have Federal Reserve's Bowman, who's highlighting and arguing in terms of the current economic environment, saying that that doesn't warrant the central bank cutting interest rates, and certainly not at this point of time. So that's the word coming in from Bowman, Michelle Bowman, in terms of the Federal Bank's commentary that front as well. Bank of England's Swati Dhingra, who warned about delayed interest rate cuts, comes at a cost of living, standard of living in terms of, as well as a good trigger hard landing for the UK economy. So that's the concern that's highlighted by BOE in terms of commentary on that front. And lastly, we have commentary that is coming from ECB's Wunsch, who's highlighting that the financial markets are pricing in a swift return to the price stability. Inflation expectations remain quite anchored, and long-term interest rates are down again. So that's a factor that is highlighted by them as well.
Let me now welcome on board our chartist as well and find out what the trade setup for the day is looking like. And Kunal, morning, a bit of a pause yesterday, still clinging on to 22K, some consolidation you think, looking at the global cues?
Good morning. No major change in terms of the open interest data. We are, I think, 1 week away from the expiry next week for the February series and the start of the March series. So I think looking at the data so far, there is no major tinkering with respect to the open interest for both the Nifty as well as Bank Nifty. Now the only, the two important factors which we are looking out for, one in terms of the technical supports, is the 21,700, 750 mark, which was the previous resistance for the index. And the moment we managed to break past about those levels, we've seen the momentum coming back into the indices. And Bank Nifty for a similar level for the Bank Nifty is closer to 46,500 mark. The other factor which is very important is the India VIX, which is still at 16 odd levels. That could probably mean that we may probably get into a zone where the intraday volatility may not subside, but it may continue to remain on the higher side. Because in an ideal scenario, in the previous attempts when the Nifty was at 22,000, 22,100 mark, the India VIX was around 13.5 to 14 levels. We are almost at 15.5 to 16 plus mark for the India VIX. So that additional bit of rise in the India VIX is leading to the intraday volatility. So I think a trader has to probably try and position accordingly in this kind of a market scenario. But the trend looks bullish till the time we trade above 21,700 mark for the Nifty.
Naresh, hi, morning. Let's get in your take then on the markets, in particular the Nifty Bank Index snapping that 6-day gaining session.
So the Bank Nifty looks interesting because finally it made a dash above that 47,000 mark. And we have slowly and steadily seen some bit of support coming from HDFC Bank. ICICI Bank hit a new all-time high. You have SBI, which continues to knock higher. You have Kotak Mahindra Bank, which is no more cracking. And we are seeing mild bounces in Axis and IndusInd. So overall, the structure looks positive. Any further momentum in HDFC and ICICI could propel it higher, and that's what the scenario looks like. So it remains a buy on dips from here on, and wherein we could have an upside of say closer to 48,000 and keep a stop loss below 46,400. So a bullish bias on Bank Nifty as such.
In light of that view, Naresh, would you have any stock-specific ideas?
So again, the same idea. First is a buy in HDFC Bank. Yesterday it did a little bit of a pullback, but it has made that base around 1350 to 1400 levels. A bounce back from these areas should ideally at least take it to testing the big gap down it took a few days back. So out here expecting a bounce back towards 1500 at least in the short term. Stop loss now revised to 1420. Second is a buy on Grasim, which gave a breakout about 2150, 2200 levels and is holding on to the markets even when the markets corrected. So relative strength is clear now. So out here, a stop loss at 2150, target price of 2400.
Okay, and Kunal, let's get in your top trades. What's looking good?
So two buy calls. The first one is Avanne Havels. That's a stock which yesterday, even after the second half of selling pressure, remained quite buoyant, and the stock was almost at its day's high on closing basis also. So would suggest a buy with a target of 1440. Stop loss could be kept at 1390. And Nestle is the other stock from the FMCG pack which is looking attractive. The stock in the last 3 or 4 days has seen a mild pickup in terms of open interest. Positive data points for in terms of indicators for Nestle that indicates that maybe the stock is about to get into a breakout mode, and same with the case for many of the other FMCG stocks. So would suggest a buy with a target of 2600, stop us at 2500.
Okay, let's talk stocks and newsmakers. Anisha is here to flag off the same. Anisha, start off with Sula. What's the trigger here?
Well, yes. So there's an update which is coming from the government, which might just put the stock under pressure. At least it's a bit of a sentiment negative, and that's the WIPS policy, or the one that we call as Wine Industrial Promotion Scheme. Now, this scheme has been extended by 5 years, so that's a positive. But that news actually came for the first time in January itself, so it's largely priced in. Now, as a part of this scheme, what the government used to do is, when that 20% VAT was levied on your, alcohol and wine when you purchase, 80% of that was given back as incentives to the company. Now, the latest update and the clarification that has come in the government directive suggests that the cap which is there on this incentive might be there to the tune of 20 crore per vineyard or per winery perhaps. So that's the reason the street is a bit worried that the incentive that Sula was getting is going to get limited a bit just to 20 crore per winery, and this might mean that there would be a pressure on profitability. The initial estimates were that the pressure could be as high as 20% for FY25, but now there are other analysts who are also suggesting that it can be anywhere between 8 to 15%. So that's something to watch out for. It's a developing story because we're still trying to make sense as to what exactly the government directive is. But what we also understand is there could be a way where the company could mitigate the losses and cut it down by probably distributing the capex into various vineyard, because right now the incentive structure is made in a way that it limits it to 20 crore per winery. So if you want to just kind of get more of it, you can just probably extend and set up more wineries, but obviously it's a long gestation issue. It's not something that they can do overnight. So at least in the near term, I'm expecting a sentimental impact. The stock had already run up. There was this large block deal that had happened. So those overhangs are at least off the table, but just watching out for it today because of these latest developments which are there.
See, markets, assume that this entire, and when you used to speak to the management, everyone thought that, look, this entire window of benefits which they were getting from the state government, that's not going to change. While it's got extended, it's got extended with conditions. And those conditions, in a sense, in the near term do not maintain status quo, which means that whichever way you look at it, 5%, 10%, 20%, depending on the estimate, it will have an impact on the earnings. Of course, like Anisha said, that in a sense can get neutralized with what expansions they would do. But in the near term, it will have an impact. The stock is also expensive. Supply clearly right now is far outweighing the demand because a block deal has happened. So the buyer already has bought the stock of that large block deal, which I think happened 2 days ago. So in the near term, because it's an expensive stock, you may actually see a reaction which could be more sentimental. I'm sure the management will come out and say that, look, they will have plan in place where they would expand and they would not have impact in the long term. But in the medium term, if FY25, FY26 numbers are getting challenged, that in a sense could lead to a minor perception and derating in that high P multiple, which is 40-45 times plus. And given that a large block has happened a couple of days ago, and given that markets thought it would be status quo, it could lead to some mid-air turbulence. Very difficult to quantify how much, but yes, all I can say is the impact would be there on the stock today.
Or it could sour the grapes rather than mid-air turbulence. Yeah, but we'll have to see because this incentive is restricted for the wineries. But moving right on then, it's good news for Maruti. Citi says, Anisha, that it's the top pick in the Indian auto space.
Yes, the top pick in the Indian auto space, and they've opened a 90-day positive catalyst watch on the counter. They said that the blip per se that we saw in the December quarter in terms of soft volume was pretty much a blip, and they're expecting volumes to come back in the coming months. As far as the earnings are concerned as well, they're expecting Q4 to be strong because the discounts have come off, and of course that volume pickup is something which will help the operating leverage of the company, and that would improve the margin and profitability as well. They also talk about how there could be some news flow on the refreshes of the Swift and the desired segment of the company. So those product lines might get a bit of a refresh. These were obviously something which did very well for the company, so it will give that leg up in terms of the volumes as well. They have made some minor adjustment to their estimates as well for FY24. and they have maintained the target price right around 14,200. But just putting it on board because the rest of the auto pack recently has been getting negative coverage. Just a couple of days ago, we saw that hero note come from Morgan Stanley. There were notes talking about how the Vahan registrations of the retail segment have been coming off. So at least there's a bit of a positive news specifically on Maruti. And what they're saying, Nikunj, is that it could clearly be the outperformer within the pack.
You know, I always pay a lot of attention to when a brokerage says that in the short term we expect there could be a tactical trade. Now, this is a 90-day window catalyst watch. You know, when institutional brokerage is giving you that kind of a sense, it clearly means that they also have a sense as which way the flows are likely to move, or they feel that the buyers or big buyers for a large cap stock like Maruti, they are back. So what Citi is saying is not something incrementally new, but in terms of an messaging, they feel that there is a tactical 90-day outperformance which could be there on Maruti. And this is one stock, you know, Anisha, we can argue both ways. The fans and the EV fans would say that, look, they've lost their advantage in terms of getting attention in the EV space. The purist would say that globally companies are coming back to what really could be the hybrid model, and EV companies are struggling, and look at the Tesla stocks. So actually what's happening in the global level is good news for Maruti, that everyone is realizing that EV may not be the mainstay. So I can argue both ways when it comes to big picture for Maruti. But one thing is for sure, that their small sedan market now needs an upgrade. And if they are able to come up with some new announcements that, look, SUV is the dominant market leader, but what's happening to sedan, which is where Maruti is the market leader, and how are they able to come it back? So if Citi expects that some announcements are coming on that front, because the report clearly talks about significant new refreshes of Swift, lower discounts and desire in terms of the choice of car. If something comes on that, that means that Maruti is hoping that FY24 could be the comeback year for sedan. See, what matters, Ayesha, in my book is that SUV was a trend, we know it. Mahindra has dominated it, we know it. Maruti is trying to come back in SUV, we know it. But choti gadi ka kya hoga? Maruti still is the leader there.
Player, yeah.
If they are confident that the SUV market share at 50-55% will peak out, and it could come down because of the base, then the small car in the sedan market could actually make a comeback. Less discounts, more cars, I don't know. It could be the ulti picture this time.
Okay, on that note, we're going to take a break. Anisha, thanks for flagging off those stocks. Sula, Maruti, both on our radar, as are many others. But we'll highlight all of those after this very quick break.
Welcome back. Still tuned into the market. Let's welcome on board Sanjeev Bhasin, who's joining in on the show. Sanjeev, good to have you on board. Let's get a sense from you then how you're looking at Maruti, given the fact that now you've got Citi as well endorsing its view on the stock, saying that it's one of the top picks, and we've seen a pretty strong meteoric rise in Maruti of late as well.
Yeah, good morning, Avanne. Maruti has been under our coverage since 6.5, 7, 8. And we continue to thought, we thought 12,000 was a very big number, which we will get to. But now I think given the consensus and the underweight of most overseas investors, Maruti becomes another catalyst for growth. We are aware that the rural incomes pick up, the aspiration of owning the Alto, the Ertiga, or their new models, and their adaptation into hybrid and EVs, that is playing very well for them. So I think the operating leverage has played out well. Numbers were far in excess of what the market was making. I think it's the best India demographic play which you have. So as a disclosure, we have it in our portfolio and we don't have any intention to sell it in the near term.
Sanjeev, hi, morning. Some words of caution on OMCs actually. You know, CLSA is saying that worries about marketing margins may actually re-emerge. Bernstein is saying that utilities is actually the second most stretched PSU sector or segment in terms of valuations. What is your thought on OMCs?
Yes, Ayesha, good morning. I think OMCs or PSUs as a pack, except for say a state bank or couple of banks, you should be lightening your position, particularly metals, gas, and the OMCs. Now it's not that they've been huge outperformers, so obviously profit booking will be part of the case. But for us, the only overweight here is ONGC, which we are very, very constructive on. The rest, we would be slightly cautious. We also own IOC and Nalco in our portfolios, which we intend to keep for some time. But like I said, right now the room for comfort is less because of the sharp run-up, and corrections will be part and course of the market. You will see money go into private banks, into engineering. Who thought ABB will be on a circuit? I think Larsen is looking extremely good. So money will keep shifting, and OMCs could see some more profit booking over here.
Okay, fair enough. And what's the outlook then in general on PSUs as a whole, given that you've got brokerages of the view that now the index is looking a little bit expensive at an 11.2 times forward PE?
Avan, when the market goes out of sync, then you come out with price earnings and multiples and expensive valuations. 13 lakh crore has become 60 lakh crore in 4 years. Anybody who's owned PSUs is laughing his way to the bank. And I think the sheer underweight of lot of people have missed this, whole party. Yes, now valuations will look stressed because there is under ownership. And as you see, the marquee names now getting into them, there will be this provincial overbought position, which is evident in a lot of stocks. So we are neutral on them. We are not overall negative. You have to pick and choose your winners, and also learn to book profits. Leave the rest of the 10-12% which you perceive in, let the other person earn it, but take home some money. Like we said, get into HDFC Bank, get into ICICI, get into Larsen. There are enough other large caps which can give you much more value for money and still keep you invested after booking profit.
Well, talking about HDFC Bank, let's bring up how that stock has moved in the last 7 to 5 odd days. And while this month, of course, it's seen a decline of about 2%, in the last 7 days alone, it has perked up about 3.25% or so. Already back above the 1400 price level. Kunal wanted to understand whether there's a chance that it's going to retest its 52-week lows, or do you think it's now moved on from that trajectory and we will see higher levels to go?
I think we should see higher levels for HDFC Bank, but it will not be a vertical kind of a rally for the stock price because of the nature of trades built up into the stock. But on the other hand, I think if the stock, looking at the strength across the banking index, I believe the chances of the stock falling lower and back again at the 1350-60 mark, which it tested last week or so, I think that is pretty low for HDFC Bank. Now, my sense is that the stock is going through a mean reversion process. After trading at 1350-60 mark, the divergence from the long-term average for HDFC Bank was almost 10% to 15% and more. So that generally is a very rare kind of a divergence for a large cap stock. And when the stock gets into a mean reversion process, it tries to negate the steep divergence and at least come back closer to its 200 moving average. So net I'm expecting at least another 70 to 80 points rally for HDFC Bank. As I said, it will not be a vertical or a V-shaped rally for the stock price. Gradually, I would believe possibly in the next 2 to 3 weeks, the stock may climb back above that 1500 levels also.
Okay, fair enough. Meantime, let's also get in a take then from you, Sanjeev, as to what the outlook is when it comes to those metal stocks. Just yesterday in trade, in fact, the likes of a JSW, a Tata Steel, they were all abuzz. What's the outlook?
Yes, Avan, that is one space which you are very positive. In fact, if you see the Nikkei hit is on the verge of 39,000, which is almost a 40-year high. And it's metals and banks, because we are seeing that the weakness in the dollar is going to get extended. And as a proxy play, metals are in a very sweet spot. In fact, in the last 2 days, we've added Hindalco. This market is uncanny about this Novelis IPO pricing. And that will take care of its capex. But look at the strength of the market over there, both in Canada and in North America. Hindalco is arguably the cheapest metal stock you can get anywhere in the universe. So we have gone overweight on Hindalco at this 505, 510. We have also got overweight on Vedanta. We own Tata Steel and JSW, and we think and SAIL. And we think this basket is going to hugely outperform in any rally now, taking us to newer highs. Metals has to be a proxy. Hindalco is an ad at these levels. It has fallen sharply for one reason of Novelis overrun on its capex. But I think the new IPO will be at a sharp premium, which actually the proceeds go to Hindalco, being the 100% subsidiary of that. I think Hindalco is a cash-rich company. generating excellent EBITDA. And I think at this price, this should be in your portfolio along with Vedanta. As a disclosure, Vedanta and Dalco, 4-5 of these stocks are in our portfolio, and we think they can give you that extra delta in the coming months.
Have to ask you about what do you make of Grasim's entry into the paint segment? Our correspondent is in Panipat. He just joined us a short while back. They're all set to inaugurate their first, paint plant today. But, for an Asian Paints and a Berger, which have the lion's share of the market, and the kind of valuations that both these stocks are at, 50 times plus, what would it mean?
Yes, Ayesha, we debated this couple of days back. Look, a brand like Asian or a Berger is there from many, many years. In fact, when we first joined the market 40, 50 years back, it was, I mean, not me, but Asian Paint was still the brand with Gattu being the mascot. And it has made foray into each and every household. It still has 53% of the decorative segment. For Grasim, it becomes a very, very good ancillary because it's a byproduct from their existing business. And I think there is enough room in this space for even two more players to last. We know JSW has also got into that. Asian Paints has seen profit booking or some selling because of that. But we still remain constructive on this company. This is one company along with MRF which has never diluted equity. And if you thought MRF was expensive at 75,000 6 months back, it is now 1.5 lakh. I think it's a good time to get into Asian Paints and Grasim. We own both those stocks, Grasim for the other businesses and the new foray, and Asian Paint because the valuation now is very, very seemingly telling us that the middle income rise is also made brand awareness very much part of parcel. And I think Asian Paint will continue to gain more market share or at least stay at those levels. Given that input costs are falling, their margins may actually do well in the coming quarters.
All right. It gives me great pleasure now to bring on board Nilesh Shah, Managing Director of Kotak KMC. And 6 years ago, we spoke about how India's weightage in the MSCI index was all set to go higher. China was the dominant one. And look at that tweet where we are just revisiting what he, in a sense, predicted. And in this case, हम हिंदी में बोल सकते हैं, देखो इन्होंने बोला था. So नीलेश भाई आपने बोला था, अब हो गया है.
So Nikunj bhai, yes, it feels good that we could predict how India will rise and why global savings should come towards India rather than China. Obviously, a lot of work has gone in ensuring this. The reason why we had to engage with MSCI to increase our weight is that a lot of passive funds, almost $2 trillion worth today, follows MSCI emerging market benchmark. And if our weight goes up, we'll receive more flows. All the other active fund managers, majority of them follow MSCI indices. In some sense, it is fair to say, higher the weightage in the index, higher the allocation out of global saving towards your country. If our weights would have gone down, then we would have not only lost future flows, but also people would have redeemed from their invested amount in India. And which is why it was important to engage. And I'm really happy that our regulatory authorities did manage that proactively. And today we have moved from 8% to 18% in 6 years, whereas China, instead of going from 30% plus to 50% plus, is now 25%.
So, Nilesh bhai, my next question is that can we go in terms of weightage in the next 3-5 years as high as China, which was peak 30%?
Nikunj bhai, never say never. And we will all hope, pray and work towards achieving that. Of course, there are two immediate things which should happen and which should increase India's weight further. One, Korea is considered as part of emerging market. Their president in their election campaign has talked about Korea becoming part of developed market. I hope and pray at some point of time, a $35,000 per capita GDP country moves out of emerging market into developed market. If that happens, then low double-digit weight of Korea will get divided among other emerging market, including India. The second thing which we have to achieve is one of our bank is included at 50% weight in MSCI index. It should be included at 100% weight. Why give discounted treatment? If these two things happen over next 6-12 months, we should see reasonable increase in India's weight. And if luck favors, from the teens, we will go into 20s. And then the gap between us and China will narrow further. And over next 5-6 years, there is a reasonably good chance that if we maintain our economic growth and valuation, then we should be where today's China's weight is.
Okay. I'd like to draw everyone's attention, Nilesh bhai, to the Indian economy. It's at about 4 trillion, plus minus 5% depending on the data cut you look at. The financial market right now are north of $4.2, $4.3 billion, again depending on the data cut and the day you look at. Do you see that in next 3 to 5 years, the financial market economy will be growing at a rate which will be significantly higher than the real economy? The reason why I'm asking this question, Nilesh bhai, is that if India, let's say, doubles in 5, 6 or 7 years, that's the debate, right? 5, 6 or 7, hona to hai. 4 will become 8. But in that journey where the real economy becomes 4 to 8, the financial market economy will achieve that at least a year or year and a half before the real economy doubles. Am I putting like a big picture, simple scenario, very straightforward for our viewers?
So Nikunj bhai, in some sense, when our financial market or financial market cap is higher than real economy, it is factoring in the future. The world believes that India's growth rate will be better than its peer. Its governance standards will be better than its peer. And probably somewhere not discounted, but believed, is that green transformation of India will be better than its peers. Today, China is world's largest contributor to environmental issues. The carbon emission is the largest in China. If you look at per capita basis, India is lowest per capita carbon emitter. Of course, China on a per capita basis is not the highest. That honor goes to developed world. Now, we will have to remain lowest per capita carbon emitter. Our growth should happen without damaging environment. If we continue to maintain this trend of growing above our peer group, having governance standards at par with developed world and better than emerging market, and doing green transformation where India continues to remain lowest per capita carbon emitter or in the lowest decile or quartile of per capita carbon emitter, then I have no doubt in my mind that as our economic size doubles, financial market cap or markets will probably remain higher than the economic size.
So for someone who says, okay, this is India's Amrit Kal, I want to stay invested, but markets at an all-time high, valuations at an all-time high, financial markets has already seen a run-up. Could there be a situation where economy will continue to grow, but the stock market could lag the economic return? Could it happen the other way around?
Undoubtedly, even that can happen. If our future economic growth starts, falling or faltering vis-a-vis our peers, then certainly the premium valuation which we are getting today in the 20s will not be available. If our governance standards falters like it has faltered in Russia, China, Brazil, South Africa, then certainly the premium valuation which we are enjoying will not be available. So as long as my 3G of growth, governance and green is better than my peers, financial markets has chance of staying ahead of economic market as people discount future and give higher weight to it. If we falter on any one of this, then certainly financial market will be lower than the economic real GDP.
Thank you very much. 6 years ago, we had a conversation where Nilesh Shah made a case that India actually could see a big change in terms of the MSCI weightage. It will be talk of the town. And what looked like a thought now is a consensus view. That time it was the minority view. Today it is the consensus view. So thank you very much, Nilesh Bhai. Always a pleasure to have you on ET Now.
Thank you.
Pankaj Pandey, good morning. How are we doing?
Nikunj.
Bulls are saying energy nahi hai. The thunder is not there. Markets are making an all-time high, but that's just optics. The underlying fabric of the market in last 8-10 days seems to be getting slightly weak.
So at 22,000 levels, obviously it's a psychological level. Some bit of a nervousness is very much, understandable. But our sense is that typically during month of say Feb and March, market usually sort of tends to correct, and from there on we see things panning out on a better direction. And our sense is that for month of March, probably 3-4% kind of an upside is very much on the cards. Overall, earnings season was quite okay according to us. So we don't see much of a risk to the double-digit earning growth what we have penciled in for next 2 years. And I think 25,000 target for Nifty remains intact. In fact, if you look at market cap wise, what we are also seeing is that while people talk that small caps are sort of quite pricey, but our sense is that with 26% kind of earning growth, I think you have ample opportunities across caps. So be it large caps, be it mid caps or small caps. So I think overall setup looks good to us. The only hitch is that people are still sort of questioning what kind of or the quantum of rate cuts we could get, especially from the US, because our rate cuts also probably will hinge upon the kind of a rate cut what US Fed will do. And which is why I think financials is still sort of soft and not really sort of contributing. And we should understand that financial is 1/3 of the Nifty. So that is really not contributing at this point in time. And despite that, we are at 22,000 plus kind of levels at lifetime highs. So I think we still have enough firepower to sort of take Nifty to much higher levels. And I think if election outcomes come on expected lines, then I think overall we'll not be surprised if 25,000 is very much likely on Nifty.
Okay, fair enough. Meantime, how are you reading into the ups and downs and the roller coaster ride really when it comes to Z Entertainment and the Sony merger saga?
So very difficult to sort of comment on this stock because fundamentally we were expecting that the ad revenue growth should improve in the second half. It hasn't happened for this company and even for Sun TV. So that's a sort of a missing leg. And I think if there are questions on the balance sheet, then it is very difficult to sort of put a fundamental perspective. So I think it is best to sort of avoid this stock till the time clarity emerges. I think no point in sort of doing bottom fishing in this stock.
So Pankaj, tell us what are your buy and sell biases in the market right now? Any stock ideas or themes you're working with?
So it's a kind of a pretty mixed thing, but what we are sort of liking is the cement and the infra space. So we like the entire tier 2 cement as a pack, and be it Star Cement, be it Birla Corporation, or even something like Sagar Cement. What we are also liking, because see, in cement companies, the overall valuation gap between tier 1s and tier 2s is quite significant. And we have seen that it has been a secular improvement in the EBITDA pattern for most of the companies, and most of the companies are also sort of guiding for decent volume growth there. So that is one segment what we are also liking. Then in the infra side, we have sort of upgraded some of the companies like NCC to a target price of 275. I think infra space, the valuations are sort of okay at 15-16 times. You have visibility for 2-3 years in terms of double-digit growth with margins largely likely to remain intact. And I think they'll also sort of benefit from the fact that if we see an interest rate decline in the second half. So I think infra as a space plus cement as a space is looking good. And then we are still liking select PSUs and select stocks across large caps, mid caps, and small caps.
Right. Okay, Pankaj, stay with us. Lots more to talk about, but a lot of sectors and stocks which are going to be in focus. And sugar companies, it seems as the fair remunerative price has been now upped to by about 8% for the period of 2024-25. Let's try and understand how this is going to impact sugar companies. Sharad is here with that analysis.
Well, it's a move coming in from the central government, and importantly the sugar stocks would be in focus as the FRP, which is called the fair remunerative price, that has increased by 8%, coming in at roughly 340 rupees per quintal, and this is for the next season as well. And importantly, last year also the FRP was raised, but the amount was lesser. It was roughly 10 rupees per quintal. And importantly, the basic recovery rate, that remains unchanged at almost 10.25%. But what's the impact? Sentimentally, it's expected to be negative on the sugar stocks. But do remember, most of the sugar stocks actually guided by their MSPs also, which are coming in from the state level objectives. Also, this is a populist move that analysts are stating just ahead of the elections. And do remember that the sugar season, the next one, starts in the month of October as well. So sentimentally kind of a negative news flow might be coming for the sugar sector, but overall the impact seems negligible currently. But remember, there are two sides of the coin for the sugar sector, and of course the first one is that the state-wise crushing data is the data which we looked at, that has been growing and there has been a significant improvement in the sugar production. But on the underside, because of the highest sugar production, what has happened is higher crushing is also there, and that could actually put a downward pressure on the sugar prices as well. So sugar industry itself is kind of having mixed signals currently going ahead into the elections.
Okay, mixed signals when it comes to the sugar space. Pankaj, have you looked at any of the stocks within the sugar sector?
So overall, when you look at most of the sugar stocks, they used to trade at some 5-6 multiples, and now most of them have sort of inched up to lower double-digit kind of a multiples. And that is largely the ethanol theme which is being played out, where eventually we'll get to 20% blending. Now, when you sort of look at coal as a sector, that is offering interesting avenues to sort of participate going forward. One is, so for example, what we are liking is, say, Coal India. Now, while primary demand for that is thermal or the end usage, what we see in some of the other sectors. But when you sort of venture into coal gasification, wherein you manufacture synthetic gas, eventually you can sort of end up producing methanol, which also can be blended with petrol and diesel. And we have seen China sort of doing it quite successfully. And eventually this, so this is another sort of avenue which is sort of opening up for lowering the carbon emission. And mind you, Coal India offers a good dividend yield, plus the valuations are quite attractive. For next 2-3 years, one could easily see a double-digit kind of a volume growth. They are already sort of doing well on the volume growth front. So I think Coal India looks a good play for reducing the carbon emission with valuations in sort of a quite fine shape. We have a target price of 500 on Coal India.
Okay, fair enough. Meantime, Kunal, just wanted to get in a take from you as well on some of the smart movers yesterday. ABB on the charts. How are you looking at a Raymond as well?
So I think both the charts are very attractive. ABB, in fact, yesterday has managed to come back above a zone of consolidation. So the stock in the last 2 months from November end, the stock had made a high which was closer to 4,800, 850 mark, made a low of 4,400 in the subsequent months. So it was purely in the range of this 400, 500 points for itself. And after yesterday's move, we've seen the price moving higher above that 4,800 mark, and the volumes being on the much higher side. So this we classically term it as a price volume breakout for a stock like ABB. Looks very attractive at current levels and would probably look out for dips closer to this 4,800 mark as a good opportunity to buy. Raymond, on the other hand, I think is a classic case of a breakout, because I would believe that the stock is just ending a zone of consolidation. It's still trading below its 52-week highs. I think 2,200, 2,250 was the previous high for Raymond. The stock is now almost at that 1,850, 1,900 levels. I think it's a very good territory to try and go for a fresh long on the stock at current levels, and possibly in the next 2 to 3 months, I would expect the new high to be tested again of 2,200 for Raymond.
Okay, speaking of Raymond, in fact, Harmohan H. Sahni, the CEO of Raymond Realty, spoke about the details of the Bandra project, saying that revenue from it will start kicking in by FY25. Listen in.
As far as Bombay is concerned, I think Bombay was lagging behind in terms of infrastructure, and there have been lots of large plans which we have heard over the last 20 years, which didn't come to fruition. But in the last 5 to 7 years, we have seen a lot of work going on, whether it is metro, whether it is road network. All of this is great. We launched the project yesterday evening to all our channel partners. We unveiled all the details. So it already started. The construction has started. The sales will be starting from today onward.
Okay, that's the view coming in from Raymond Realty. Just looking at some of the other newsmakers today, and ABB surely was a big mover in trade after its numbers surprised the street and beat the estimates. Naresh wanted to get in a sense on the charts for ABB, but before that, sorry, not Naresh. Naresh has already highlighted his views. Pankaj, just within cap goods, where is it that you see opportunity in light of what ABB has done?
So I think one obvious concern with some of these names, big names like Siemens and ABB, is that their valuations are quite high, but you really do not see much of a sell-off happens because nobody wants to sort of sell these companies. Because while we look at valuations for next 2 years, they look quite richly valued. But when you sort of look at next 5-7 years down the line, a lot of these companies really look attractive, but fundamentally it's very difficult to put a price to some of these names. But we like this entire space. L&T is where we have sort of upgraded our target price to 4,100. Then we also like some of the niche players, like, say, for example, Action Construction Equipment, or even other companies in that space. So we are trying to sort of play through both large caps as well as mid caps, this entire capex as a theme. But overall, I think if we get any kind of a dip in some of these names, I think one should buy. But the perspective has to be more than 2 years.
Okay, meantime, you've got ITC in the spotlight. They're looking to acquire 47% stake in Pratap Snacks, according to the Economic Times report. Let's understand what exactly this means. Remember, Peak 15 holds about 47% stake, which ITC is now eyeing. We've got Vinny here to break it down for us. Vinny?
So absolutely, this is a recent announcement that has come in. Pratap Snacks actually seems like has been on the block for a while because they've been in talks with a lot of players. Last month we had heard rumors about Haldiram being one of the players as well, and now ITC's name is coming in. So obviously 47% stake of Peak 15 is what ITC may be looking to acquire. This is according to Economic Times report, and this will obviously trigger an open offer as well. So given that there is significant headroom in terms of growth that one could see for the snack market as well, because the Indian snack market just from 2022 to 2023 has doubled itself as well. When you look at the Indian snack market, it was 42,000 crores approximately in 2022. In 2023, it's become around 95,000 to 96,000 crores. So doubling in terms of the snack market. So very good opportunity that is there in terms of growth in the snack market as well. Let's not forget ITC's next strategy also is there to focus in terms of food and ready-to-eat products as well. And Yoga Bar was the last acquisition that they made. Now, if this does happen, this will give them a furthermore, the food and FMCG player that they want to become as well. So focus could be on that front as well. And snacks market is a very attractive market. Currently, when you look at price, the market cap to sales for Pratap Snacks as well, much cheaper than other peers, whether you compare like a BKG as well. So in terms of the valuation also seems much cheaper versus other players. So an interesting one to look out for. Whether this deal actually happens will give ITC a further push in terms of that as well, and no worries in terms of cash on hand that they have in terms of for ITC on the books as well. Though ITC right now said that they do not want to comment in terms of overall any market speculations that are going on as well, and this is what ITC told ET Now as well, that they would refrain from commenting on such speculations right now.
Okay, that's the take coming in on ITC and whether it's an interested party in Pratap Snacks or not. In the meantime, bunch of other stocks which are going to be in focus this morning, and let's just highlight some of those. We've already told you about the cautious notes that you're getting from brokerages, both CLSA as well as Bernstein, on OMCs. But in the meantime, bunch of block deals as well, which are in focus. And, Eureka Forbes is clearly one of them, wherein sources are saying that the promoters are now looking to sell about almost 12% stake. So maybe, that block deal could happen today. NBCC, which has got an in-principle nod from Greater Noida Authority for 5 projects, which equate to about almost 1,000 crore rupees. That's going to be the other stock which is going to be in focus. Grasim, like we've already pointed out, that's opening its Panipat paints plant today. So that's the other one which is in focus. And look out for what LTI Mindtree as well does, because they've signed an MOU to set up a generative AI and digital hub in Europe as well as India. So that's going to be the other stock which is going to be in focus this morning. But besides that, that's of course the pre-open rates. Let's just mark what the Nifty open is like, because the implied open is indicating a mildly positive start. Seems like we're going to jump back above the 22,100 mark. And 22,000, of course, is something that we've been protecting as well. That was the case yesterday too. But yeah, the movers from yesterday, clearly there was a bout of profit taking for a BPCL, for a Coal India. The entire energy basket and especially the PSUs have already been seeing that bout of profit taking. So let's see whether that profit taking persists today or not. In terms of newsmakers, today look out for sugar names, because the cabinet has once again hiked the sugarcane FRP. So that's going to be definitely sentimental negative. You are already seeing some sharp cracks emerge, at least on the likes of Balrampur Chini and South Indian Bank as well, wherein the board has now approved a fundraise of about 1151 odd crore rupees via a rights issue. So that's going to be the other stock which is going to be in focus this morning. So that said, the texture of the market, of course, seems to be a lot more consolidation. And Pankaj, that's what we were wondering, where the next cue for the market is going to really come in from, at a time when much of the fundamentals, at least so far, with terms of earnings and important events, clearly are behind us now.
So I think one important parameter which we feel that can sort of change the complexion of the market is obviously the stance changed by RBI. So at this point of time, RBI is still maintaining a stance. I think if we get some softer data print in US and in subsequent policies, RBI also sort of changes their stance, then I think the entire BFSI as a space can provide the necessary lift-off to the market. I think that is one space which has really not been sort of participating much. And I think be it your private sector banks or PSUs are participating to some extent, and also the NBFCs as a segment. I think that is one segment which is yet not sort of meaningfully contributed to the overall levels to the tune of about 22,000 what we are seeing in Nifty. So I think change of stance by RBI probably triggered by some US data print or US Fed action, I think should sort of change the complexion.
Okay, that's the take coming in right now on the market and where the next set of triggers are going to come in from. Pankaj, good to have you on the show as always. We'll let you go on that note. It seems like it's going to be one of those very, very quiet starts. That's what the Nifty seems to be indicating. But about a 0.5% uptick is what you're seeing on the Sensex. But let's move outside the index. Naresh, any mid-cap ideas?
So that would be a buy on Suntech Realty. That's the only stock which has not really moved up in the whole real estate basket. And the stock is available at the same prices as it was almost roughly 4 or 5 years back as well. So the stock was at these prices back in 2018, then in 2019 as well in 2021-22. Then in the last 2 years, it's making a classical cup and handle formation which has a breakout of 510. If that happens, it opens up a target towards an all-time high, which is closer to 590, 600. So a buy at current levels with a stop loss at 460 and a target price of 600.
Right. Kunal, what about your mid-cap ideas?
That'll be a buy on PI Industries. Just last week, I think 3 days back, the stock had managed to break past about the 200-day moving average. It's managed to rise up another 60, 70 points further from those levels. But this last 3 days of price action indicates that this could be a start of a strong trending move for PI Industries. So would suggest a buy with a target of 3,800 and stop loss could be kept at 3,630.
Okay, before we move forward, let's just tell you what else is happening outside the world of markets. And Amul of Gujarat, which employs thousands of people through a cooperative society, is celebrating its Golden Jubilee or 50th anniversary today. The Golden Jubilee event will see Prime Minister Narendra Modi inaugurating a slew of projects in Ahmedabad. Founded in 1946, Amul is a multinational cooperative society which contributed to India's milk production revolution, also known as Operation Flood or White Revolution. Also, the situation turned tense as Haryana border points after police fired tear gas shells to disperse protesting farmers who attempted to displace barricades. The farmers have put on protests on hold for 2 days after the death of a 24-year-old farmer in the clashes with Haryana police. Meanwhile, the Modi government has offered a fifth round of talks to the protesting farmers. Also, an avalanche warning is issued for several areas of Himachal Pradesh as the cold wave got further aggravated following fresh snowfall and rain in the tribal and hilly region. Over 400 roads, including our national highways, or rather 4 national highways, were rendered shut by snow, and more than 60 people have already lost their lives because of the landslides and snowfall-related incidents since January 1st in the state of Himachal Pradesh. And all eyes are on NASA today as it's going to be preparing to land its hexagon-shaped robot Odysseus near the lunar South Pole today. If successful, this would be America's first spaceship on the moon in more than 50 years. Odysseus launched on February 15th on SpaceX Falcon 9 rocket.